But another sector on which we're putting the spotlight on this morning is the capital goods space. Of course, this is a sector that's been well loved by the market in the last 12 months. The question is, what do you do now? If you want to make fresh allocation, do capital goods stocks still make the cut? Now, in a recent note, IIFL Securities says that domestic execution was healthy in the third quarter and exports were a little soft because of global inventory destocking. IIFL is actually still positive on quite a few capital goods stocks. To talk about this, we have Renu Pugalia, Senior Vice President Research at IIFL Institutional Equities. Renu, so that question to you, right? I think, good morning, first of all, thank you for joining in. I think the question that everyone's grappling with, there are a lot of capital goods stocks, they've given fantastic returns already. So the question is whether valuations still leave more on the table and whether this kind of growth that we have seen in the past, whether that can continue. Given that there's so much going on in the sector, there's energy transition, some companies like CG Power are going and setting up semiconductor assembly units, a lot happening. What should investors keep their eye on? Which stocks?
First, good morning, everyone. So I would say cap goods, the sector overall still has a lot of legs in terms of growth. First, if you look in terms of the large infra-led sectors, while it was railway, water, other infra driving, now the government has clearly expressed its intent to focus on the power sector reforms and bring back the investments in thermal power. Now, this has been one of the biggest driver of investments during the last cycle and the biggest link during the current cycle investments. So this will add longevity to the cycle in terms of capex and investments. Secondly, in terms of private sector investments, they're broadly holding up well, and new sectors are clearly emerging, like the electronics and semiconductor, which they did not exist in India, but OSAT in the next 2 years could be another $4 to $5 billion market for Indian companies here. So to that extent, we have seen the rally, or I would say the drivers being far more broad-based. So while we did mention that exports in the short term have seen some moderation, but it's more of a cyclical adjustments in global inventories and inflation impact in a lot of economies outside. But the domestic market remains very strong and resilient. And I think that will ensure that the growth momentum is broadly maintained even over the next 2 to 3 years as we move ahead. So while there will be some interim impact for a quarter or two during elections, I think that will be just more of a near-term adjustment. But the 2 to 3 year growth outlook in terms of earnings and revenue order book for across companies in the sector have been fairly strong. So that should help the companies and the valuations as well.
Got it. Renu, hi, good morning. So you mentioned OSAT, right? I just wanted to mention for the benefit of our viewers, that's outsourced semiconductor assembly and test. And now there are larger players like Intel, etc., getting into this space. I want to understand, what does this mean for a name like CG Power, which has been sitting at fresh 52-week highs day after day. Now it's announced its semiconductor foray as well. For someone who's missed the bus here, is there more to go on the upside?
I think from a stock perspective, the core business is reasonably priced, but the market is still trying to identify what value to be ascribed to the OSAT business. They've announced investments of almost $790 million. Business typically compared to other businesses is not very high asset turns, but the fact that government is given 50% capital subsidy from the central government, 25% from state government. So with nearly 75% capital subsidy, this business becomes fairly attractive in terms of ROCEs. And what will help value accretion is they have got the right technology partners in place. But this business will take about 2 to 3 years to come into shape, start operations, and then kickstart. So what it means for CG Power is a completely new diversified revenue stream, which is very different from their current industrial products business or the power products business. And this gives them an opportunity to play in the electronics value chain in the country and also be a small part of the global supply chain. So to that extent, I think the value of the OSAT business is not fully captured. And if we try and ascribe a value anywhere between 8 to 100 billion rupees for this, 80 to 100 billion rupees for this. So to that extent, I think there is still enough headroom for upside in the stock and name. So it becomes a good proxy play on core investments in the power sector through T&D play, through industrial short cycle, at the same time electronics value chain through the OSAT entry, which they have recently announced.
Okay, all right. Renu, good morning and good to see you again. I wanted your view on this entire transformer space. Plenty of interest out there. Could you tell us who is best placed according to you?
Difficult to answer who. I think pointing out to one single player would be difficult. What I can outline is, if you look at the demand-supply dynamics in the transformer sector, now has clearly tilted towards the equipment manufacturers, given the fact that Chinese players who were almost 30-35% of the market are out today. And in demand in terms of investments coming in from the private sector capex, as well as from grid investments are coming back. So to that extent, I think, the extra high voltage players who were struggling with massive demand supply mismatches earlier now are in a sweet spot. So there are 3-4 large companies in the listed space, be it GE T&D, Hitachi Energy, CG Power in this space. They will clearly benefit. And if we see the government going ahead with distribution reforms over the next 12-18 months, once they are back in power, then I think the whole bunch of medium and low voltage transformer companies would see significant step up, changes in regulations, rating. So I think the entire value chain, be it the medium low voltage space or the high voltage players, everybody will benefit. The industry was plagued with undercapacity and underinvestments over the last 5-7 years. And everybody, I think most of the companies have announced capacity expansion between 50% to 100%. And that, in my view, will just cater to the next 2.5, 3 years. Companies will have to step up investments further if the entire power sector value chain really shows up in terms of investments in thermal power growth.
Renu, I guess your optimism shows up in your recommendations as well. You have either ads or buys across pretty much the entire sector, right? But help us out here in terms of perhaps the top 1 or 2 ideas. I mean, which are the best stocks to be in right now if someone's making fresh allocations?
On a relative scale, I would say yes. If you look at some of the larger MNCs, they now look fairly priced. On a relative scale, we still like Cummins India, maybe CG Power, yes, from the new opportunities in OSAT. That also looks interesting. Bharat Electronic continues to be among our top picks in the overall sector, given strong legs of investments coming in the defense space and the order backlog. Otherwise, I would say some of the other larger names like L&T, which has been among our favorite picks, they look reasonably priced at current level. Same goes for Siemens, ABB. So to that extent, the top 3 picks adjusted for valuation, etc. I think after the recent correction and play on cap goods for us would be Bharat Electronics, Cummins, and CG Power can also be looked from a longer term perspective.
All right, Renu, we leave it at that.
Nothing is cheap in the cap goods sector. Everything is expensive.
Yeah. Well, guess what? Nothing is cheap in this market anymore, right? So we've got to live with that and just perhaps identify growth stocks and nothing too much on valuations. But of course, keeping valuations in mind, as you said. But thanks a lot for joining in. Appreciate your time here and very, very helpful discussion over there on the capital goods space.